Good morning, good afternoon. Welcome to the Look Ahead video with myself, Giles Coughlin. Our regular calendar is just undergoing some more maintenance this weekend, so I'll be looking ahead using this calendar here today. Now, the first major event we're looking at is the Bank of Japan policy meeting. Now, since December of 2023, Governor Ueda has set expectations that the Bank of Japan will be exiting its negative interest rate policy. And will they see a change this January? It's very unlikely. With the recent earthquake that's taken place in Japan, most analysts are not expecting any change and rates should be on hold for this policy decision. However, it's always worth being aware there is an outside chance that we could see a potential change. Of course, that would see immediate yen strength. And we just take a look at short-term interest rate markets in terms of the expectations for Japan, 9% chance of a hike, and the change is seen coming around March, April. Most analysts expect that April will be the potential time when the Bank of Japan will shift their policy meeting. So the key thing for us to be aware of here is that the forward guidance will be crucial. And what people will be looking for is there any indication from the Bank of Japan as to when exactly they will start exiting negative interest rates. The inflation for the core reading is expected to stay around 2% for the year 2024. So, everything is on track for the Bank of Japan to exit negative interest rates, and timing will be the key here and full guidance. If they push back strongly against exiting the policy, then obviously you'd see sudden yen weakness, but no change is really expected. New Zealand inflation data out also, that's important. It's a quarterly reading, so we don't get very much prints from New Zealand, and we're expecting a drop from 1.8% prior down to 0.5%. Now, domestic inflation is expected to fall. However, one of the major issues here with New Zealand is that imported inflation rather is expected to fall, but domestic inflation is still rather high. So a lot of analysts talking about domestic pressures remaining for New Zealand. So if there is an out of consensus print, if it is much higher to the upside, then we would be looking for a move higher in the New Zealand dollar and pair it against another weak currency. On Wednesday, we have the French, German, UK flash PMIs. Very interesting here with the ECB. They do meet this week as well. What the ECB have been doing is they've been communicating to markets that the 5-6 rate cuts that they're projecting seems too steep. And the PMI prints could be another reason for the euro to gain ahead of Thursday's meeting. So what we're looking for here is if we start seeing these readings pop much higher, if they come in above maximum expectations, which we'll be covering nearer to the event, and if they come in above 50%, particularly for Germany, if we start to see services coming in above 50, for France, if we see that pushing up towards 50, if we start to see expansionary territory in the Eurozone, that will surprise markets a little bit, and we could see another leg higher in the euro as they push back expectations for deep ECB rate cuts this year. The Bank of Canada is also meeting on Wednesday, and they're in a fairly neutral position. Markets are beginning to expect rate cuts to come from the Bank of Canada. There was a business outlook report which was pretty weak, and that indicates there is a slowing down of economic activity, and particularly businesses are feeling less confidence. The higher interest rates starting to drag on consumer spending. And all of that is just making analysts expect a potential shift in the Bank of Canadian policy when they start to signal upcoming rate cuts. So it's definitely one to watch on Wednesday. And again, no change expected, but it'd be the forward guidance. So if they push back strongly against rate cuts and sort of insist that they may need to keep hiking interest rates, then you could see the CAD again. With the recent dollar strength we've been having over the last sort of few days, particularly since the start of the new year, really, we've seen a lot of dollar strength. So dollar CAD upside does make sense heading into the decision, and you would expect a bit of CAD weakness as we get closer to Wednesday's meeting. On Thursday, we've got the ECB interest rate decision. ECB have spent the last couple of weeks trying to persuade markets that 5 or 6 rate cuts that they're projecting is too many. It's too optimistic and is not corresponding to what the ECB will actually do. So expect the ECB to continue that narrative and expect them to sort of push back and insist that they may need to keep rates as they are, or maybe 1 or 2 cuts, but they won't be wanting to open the door to 5 or 6 rate cuts. So it'll be interesting what the ECB actually say on Thursday. Do they confirm that sort of more hawkish position or the higher for longer position? We've seen central banks do that quite a few times. The Reserve Bank of New Zealand, the Reserve Bank of Australia, and will we see the ECB now communicate a higher for longer narrative? If we do, we could expect to see some euro gains potentially against the Swiss franc, with the SMB Jordan recently saying that the Swiss franc is quite strong, maybe overly valued, and he's not wanting to see further Swiss franc strength and hinting at potential policy intervention through FX market. So as a result, what we're looking for here is maybe continuing upside in the euro Swiss franc heading into this meeting. And if we do see a very hawkish outlook compared to the dovish one that markets are projecting of 5-6 rate cuts, even if they just say we're staying as we are for all year, or we're only going to expecting to cut rates once or twice this year, that in this context will be seen as more hawkish. Friday, we've got the Fed's preferred measure of inflation, the core PCE price index. This obviously will be an important metric, and if we start to see PCE prints dropping significantly lower, then some of that decent dollar strength we've seen to start the year could fade off. We are now in the blackout period ahead of the Federal Reserve's meeting. So, the US advanced GDP data and the core PCE print is the only real data we've got out from the US. The GDP will be interesting, expected to come in at 2.2%, down from the prior of 4.9%. So if we see this coming in much firmer and above market's maximum expectations, we will have that up nearer the time with a potential tradable deviation. We'll look at that in more detail once the calendar's up and running. But for now, if we see it coming in above market's maximum expectations, at the moment it's forecasting 2%, then we could see a little bit of extra dollar strength, maybe even dollar strength against the Bank of Canada if they start signaling rate cuts. So dollar CAD upside, euro Swiss franc upside are two currency pairs that look like they could be appreciating this week, certainly into the ECB meeting and the US GDP data that we have to close the week. That's all for now. We'll of course be updating throughout the week with the daily cheat sheet and looking at any tradable deviations and potential currency pairings. So take care and have a very good week.